Guys, Bitcoin dropped to $21,000 yesterday, and now it continues to trade at roughly the same levels. Many people got terrified by this sharp market movement, although some of them calmly bought up the market. And today, I'll talk about why you shouldn't do that, why the market is falling, and how long it could last. So let's get started. Folks, I recently released a video in which I predicted that Bitcoin would plummet to $21,500 soon. Let's listen to this little part from the video. If we look at the monthly Bitcoin chart, we can see an area that basically defines the bottom of this asset. We touched the black moving average twice in the past, and it was the final point that determined the bottom. At this point, we still haven't reached this level, thus we can conclude that in the near future, we should expect a drop down to $21,500. As practice has shown, I was right, although initially I did not think such a move to our point would happen so quickly. Now let's move on to the first analysis of where the Bitcoin is going. As you can see on this chart, after breaking the solid level of 30K, the price went to test that zone of resistance. After 2 unsuccessful attempts, the course dropped again. This is a perfect example of perfect price movement based on technical analysis. And if you look at the situation a little closer, on the 4-hour chart, we tried several times to rise above 30K, but unfortunately, the purchases turned out to be very tiny. Also was the expectation of raising interest rates. And all of this together was an excellent reason to pull the first cryptocurrency to the bottom. At the time of writing the scenario for the video, the price is trading at $21,200. Let me remind you that the standard bottom level usually meant the 200-day moving average, which we not only recently touched but also managed to go a little lower. We haven't seen any formative patterns yet, so don't be in a hurry to buy. The blue line worked well for a long time, but the question is, should we rely on it now? Firstly, I would pay attention to the fundamental factors because they have a long-term impact on the first cryptocurrency price. The Fear and Greed Index is 7 points now. We haven't seen figures like this in a long time. This is another good indicator showing that most people are afraid to be in the market right now. And when everyone is scared, it can be one of the most profitable purchases of your life. But it would be best if you bought wisely, in small amounts, to the background of a smoothly declining market, since the second and third bottom as a gift have not been cancelled. Interestingly, after such a sharp drop in many cryptocurrencies, the market's total capitalization is not only back from $3 trillion to $1 trillion, but it even fell below, and it's about $880 billion now, which is comparable to the end of January 2021. Analysts from company Blofin explain that current status of the financial markets by the decline in confidence in risky assets amid accelerating inflation in the US and the response to tighter monetary policy. CME FedWatch data shows a 67.8% probability of a 50 basis points Fed rate hike in June, a 32.2% probability of a 75 basis points increase, and an 83.5% probability of 75 basis points raise in July. In May, the annual inflation in the US was 8.6%, which was the highest value since December 1981. The next very important date, which will determine a lot how the Bitcoin price will behave, is July 27th. If the Fed raises the rate much more than everyone expects, it could undoubtedly provoke another collapse like this. So we must keep a close eye on the market sentiment and hints from the Fed. And next I'll show you on-chain metrics that'll help you understand where the absolute Bitcoin bottom will be. And if you liked the information so far, give this video a thumbs up, and we continue. I have some exciting charts to show you. On June 13th, Glassnode released a newsletter about the darkest phase of the bear. The main idea of the letter is that a plethora of macro indicators suggest the market is entering the deepest phase of this bear cycle. Fundamentals have deteriorated, and even long-term holders are realizing significant losses. Based on this chart from Glassnode, we can see that right now, Bitcoin is already trading below the realized price. That doesn't mean we're at the bottom, but it's an indication that it's here somewhere. Within the structural downtrend that has been in place since November, we've seen a variety of behavioral phases and Bitcoin spending demeanor taking place. We can use these changes in behavior to gauge how aggregated investor sentiment has changed. But what really matters at this point is understanding the market's mood, whether investors are selling or holding more. This chart, called liveliness, will help us with that. Liveliness has remained in a structural downtrend since August 21. Bitcoin is firmly within a regime of aggregate coin day creation as holding dominates. However, with only the holder class remaining, their demand side remains too light to contain the current action sell side. All these recent events bring no joy, but we should not forget that cryptocurrencies are with us for long. And now I'm not talking about some scam, but about real technology. So you shouldn't worry too much that your portfolio has red positions, unless you bought a lot of coins like Luna, of course. Michael Saylor reminds us of this. But here I hope that another problem will not appear. This is the case when companies will already be forced to sell assets from their balance sheets. Then vast blood rivers will flow into the market and prices will drop very sharply again. And it will be as unpleasant as possible for all investors of different classes. We've recently learned that the paper loss of analyst software provider MicroStrategy from Bitcoin holdings exceeded $1 billion. Bitcoin Treasuries testify to this. The company holds 129,218 BTC in reserves. The average purchase price of 1 BTC is approximately $30,700. MicroStrategy stock itself is very dependent on the value of Bitcoin. So this partly explains why Michael Saylor is consistently optimistic about growth. You can see on the chart that things are not looking good for the company either, and their securities have already lost about 85% since November 2021. Although the founder was immediately reassured about it, Saylor does not care at all about the current price of digital gold. He will continue to buy more and more of the first cryptocurrency, and the margin call does not threaten MicroStrategy until the price of Bitcoin drops to $3,500. And you know, I hope Michael really knows what he's doing, because I wouldn't want the biggest holder of this asset, totaling 129,000 BTC, to start selling them. If even small sales happen, it can set a bad example for the other companies. Guys, if you liked this video, please give it a thumbs up and subscribe to our channel. This way I'll know you're interested in this kind of content. Thanks for watching, your CoinPost.